cancersupportmass.org, cancersupportmass.org.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled The Key Numbers to Know for 2024. Mike, for retirees, no number is more important than that Social Security cost of living adjustment. What are we seeing in terms of the bump up in Social Security payments next year?
Yeah, well, fortunately, most individuals will be receiving an increased payment on Social Security. Unfortunately, it's not going to really come close to what they saw in 2023. So in 2023, Social Security recipients saw a nice bump up of over 8.5%. Coming next year, you'll see a much more modest increase in the 3.2% range on those Social Security benefits.
Now, the other piece here is that most people collecting Social Security also have their Medicare Part B premiums taken out of those payments each month. What's happening on that front?
Yeah, that's correct. And, that was one of the real kind of strange things about 2023 is not only did we see very big cost of living adjustments, but Medicare premiums actually came down. Next year, we're reversing that trend. We're seeing Medicare premiums go from about $165 a month up to $175. And so that's going to be a further drag on those Social Security checks. The Medicare Part B one is a bit of a tricky subject, too, because those are income-based. If you're not familiar with IRMA, a good thing to familiarize yourself with, especially if you're selling a home or investment portfolio.
Our guide this month is titled The Key Numbers to Know for 2024. And it includes a discussion of these topics and more. There are two ways to request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Kicking off the first full week of December, it's Chuck, Mike, and Tucker with you, and it's going to be a busy week data-wise. Earnings season pretty much done at this point, so not much to come there except for a few stragglers that are going to be coming through. I mean, again, unless you get really excited about AutoZone earnings this week.
The only reason I'm excited about that is because I believe that was the company that couldn't find enough accountants previously to actually report their earnings.
Oh.
I just found that entertaining in the world of shortages of accountants. I believe AutoZone was the company that had to delay their release of earnings because they literally didn't have enough accountants to do it.
So there's that.
More trivia than actual interest, though.
But when it comes to economic data, we are fairly full up, including we just got some factory orders data in the U.S. that came in a little bit weaker than expected. Tomorrow we got ISM services data. JOLTS are out, the job openings report. That's the JOLTS report that's out tomorrow. Wednesday, not too much other than, I guess, unit labor cost was a big one a month or so ago when we were talking about the initial expectations for it, but that's kind of baked in here, so I don't really expect too much there. We get weekly jobless claims Thursday, and then the jobs report and Michigan's consumer sentiment are coming out on Friday, so we're pretty full up. And then next week, we're right into CPI and PPI, so it's a busy couple weeks before we get into true end-of-year mode where everyone just says, well, it is what it is, let's go home. And
I'm tired. Let's get some dinner.
It's dark at 3:18. Let's all just go to bed at 4 and call it a day.
So let's start with that jobs report because, quite honestly, I think that's where my eyes are. I don't think this one's going to be all that interesting, but certainly where I think you're going to start to develop a picture of what this economy looks like and the possibility of that soft landing. In terms of where we've been, starting with the unemployment rate, which tends to be something that people focus on, we got as low as 3.4% both in January of this year as well as in April of this year. So it's been kind of bouncing around, but as low as those points. In October, we ran up to 3.9%. So we're about 0.5% higher than that low. And the question on my mind is, are we following some sort of trend here where we're going to peak back up? Or do you have some sort of surprise where, no, in fact, we're heading back lower in this report? I think that's an interesting trend because the last 4 months, in fact, have shown higher unemployment in each successive report.
This is coming to a head in the next 2 months. We won't know because we won't see the data until February, so it's 3 months until we see the data. But we're coming to a head in the next 2 months as far as, is there a recession coming in the first half of next year or not? And I don't know if you were paying attention on Friday, Mike, but the Atlanta Fed released their latest update for GDP Now, which is their model of where U.S. GDP is for the current quarter that we're in right now, Q4. And previously it had been trending in the low twos, like kind of right around there. The most recent update took us down to 1.2% for GDP for Q4. So here's this is where all the marbles are. Like this is it right here. Q3. What did we do? 5.2%? That was the upward revision that we got last week?
Yep.
Let's say we come in at 1.2, which, again, there's a wide error band. It's probably somewhere between, at this point, we're probably looking anywhere between 0.4 and 2% is probably where this quarter ends up coming in. But let's just call that 1.2 what it is. You come in at 1.2 for Q4. Okay, it's a 4% slowdown in the pace of GDP growth.
Yep.
If that does not abate in terms of that slowing, you're printing negative Q1. And you're probably getting a recession call shortly after by the NBER because you're not going from 5.2% in Q3 to negative 3.2% in Q1 without a recession. That does not happen. There's job loss in that case. Again, NBER is, hey, there's a significant slowdown across, all. It's there then. And it's not because of inflation. Inflation is slowing as well.
Sure. That
would be, again, do I think that happens? No, because I don't think that the path of nominal GDP takes us there.
It's pretty wild to see an 8% swing in GDP in such a short period of time.
It can happen.
Yep.
But this is the kind of stuff where you look at it and you say, if the soft landing is going to show up, then Q1, Q2, you got to start printing around like a 0 on growth and not continuing to trend downward the way that we are. The soft landing has to actually show up before you go, in the toilet economically. So when we talk about the importance of this jobs report, I think it's a monster one. I don't want to say it's the most important one of the year because I've probably said that 11 other times this year. So I don't want to be that. But what I will say is there's a really important inflection point that we're getting to where if you're going to inflect upward for the soft landing and say, hey, we're bottoming out and we're not going to continue the decline that we're now on in Q4 in terms of the pace of growth, it's got to show up in the next couple months. Otherwise, you're going to start printing recessionary numbers. So this jobs report, here's kind of where you go. Either way, is I think you're going to have some weird things that show up in it probably because the UAW strike ended.
Sure.
And so
throw things off, yeah.
That can throw some things off a little bit, but everyone knows the UAW strike ended and that could throw some things off. Mm-hmm. The question here in my mind is, hey, even with that, what if you get a bad print on jobs? You've still got a lot of room for rates to move because if you look just as an example, if there's really a recession that's starting in Q1 or Q2 of next year, is the Fed really not going to cut at all until May or June of next year? Or do they start in March and start getting pretty aggressive? So this is where we are right now. The problem for the last 2 years has been too much inflation. The problem, potentially the next couple quarters, is too little growth. And that requires a very different pattern. And just to look at what we're seeing on that inflation and growth side, remember, the Fed has a dual mandate. We want to keep unemployment down and keep inflation down.
Sure.
The Fed's a bunch of golfers. They like low numbers. That's what they prefer. They don't like the big numbers. Those scare them. Back in September, the Fed said at the end of the year that core PCE inflation would be running at 3.7. We're now on pace for that to be 3.4 to 3.5. They also said that the unemployment rate would be 3.8%. We're now on pace for that to be 3.9 to 4.1. So unemployment's going to be higher than they expected by year end, just 3 months ago. And inflation is going to be lower than they expected. And they were saying in that scenario, they expected one more rate hike this year, but then 2 cuts next year by the end of 2024. Mm. So, obviously, rate hike this year, kind of a non-starter when unemployment's running higher and inflation's
Unless
lower.
you get some sort of blowout this report, along with a CPI blowout in December. It would have to come pretty quick.
And again, the question I ask is, okay, what's the impetus for that? Because none of the other data is showing it.
Yeah, there's been no announcements of big job cuts, and if the inflation were running hotter right now, we'd see it. Anybody paying $4 a gallon for gas? I don't think so.
No.
So the inflation,
unless you're paying premium, you might still be up there.
If you're in California or Hawaii, I know you're paying $4. Everywhere else,
we don't have many listeners in California and Hawaii. The Hawaiians are still asleep.
Yeah.
Californians are still asleep. I still remember the first time I went to visit a buddy in California. He goes, "Hey, can you meet me early in the morning?" I'm like, "Yeah, what time?" 10:30. What? Excuse me. Early in the morning's like 4. You know?
Yeah. Different situation.
So there's not certainly, but it's very, very likely that there's no hike before year end. And if the Fed was pricing 2 cuts next year based on their initial projections that they have here, well, gee, probably got to go steeper than that based on, what could be materializing. So there still is a lot of room, in my opinion, with the 1-year U.S. Treasury at 5.08. The 1-year U.S. Treasury is saying 1 cut next year. So if you get we're either going to come out of the first half of next year with a growth scare where, everyone gets nervous about a recession, but it doesn't materialize, or you actually get said recession. But inflation in Q1 or Q2, even I'll go as far as Q3, probably not something you need to be worried about at this point. Unless you get some kind of new, larger regional conflict in the Middle East where Iran starts, sinking ships and, things get ugly very quickly.
Yeah. I think it's important. I know we'll be covering this later, but we'll have to contextualize that when it comes to the everything rally that we saw in November, right? I think it's safe to call that an everything rally. Bonds went up, stocks went up, gold went up, crypto went up. So that's an interesting context when we talk about what looks like a slowdown here in the United States.
Let's take a quick break here. When we come back, we'll talk about the housing market in the Boston area and just how many homes are getting snatched up by investors, preventing regular old average Joe from getting into their own home. We'll talk about that when we return.
Wall Street Watch, a full update on the market's performance to date. Weekdays at 10:30, only here on the Financial Exchange Radio Network.
Financial planning is a year-round job, and with 2023 coming to an end, it's the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We've written a brand new guide that'll help you understand some key numbers that may affect your planning next year, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, there's also information about how the government taxes your Social Security benefits. Get your copy of this new guide called Key Numbers to Know for 2024 right now by calling 800-393-4001. That's 800-393-4001. You can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Early estate planning can have many benefits, especially if you want to protect the assets that you've worked so hard to attain. If you're retired or nearing retirement and you haven't done your planning yet, you could be missing out on benefits that can save you thousands of dollars. But there's another advantage. Doing your planning the right way might also help you eliminate your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called A Tale of Two Objectives: Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets in your family and avoid probate while potentially eliminating your estate taxes. Call 866-848-5699 and get your free guide. That's 866-848-5699. Or you can request your copy online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Warner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
Piece in the Boston Globe today, and according to a report from the Metropolitan Area Planning Council, the MAPCA, or MAPSA, it could be a soft C, I'm not sure.
Hard to say for sure.
Investor purchases of homes in the greater Boston area accounted for 1 in 5 homes sold from 2004 to 2018. And in particular, now when they say investors, they're not referring to pension funds. I know that's how it comes off originally.
Sure.
But what they are talking about is, I'll define it here, the council defined private investors as those who used limited liability corporations, purchased more than 3 residential properties in 5 years, and spent at least $3.45 million over 23 years, or purchased properties with at least 4 units.
That's complex, but okay.
It's complex, and it also is something where, especially inside the 128 loop, if you were to move 3 times in a 5-year period, you would fit that qualification pretty much. So it's something that I really struggle to figure out if there's anything meaningful here in terms of restricting people from buying properties that they otherwise would have,
because that's definitely the tone of the, like, let's be clear, like, they're not looking at this and saying, hey, look how attractive the Boston area real estate market is, it's attracting investors. They're saying the Boston Globe article is saying investors are driving up the price of housing by being 1 in 5 purchasers out there.
And I'm not sure it's true for a couple different reasons. The first is, if you're buying a property with 4 units, no one is looking at that property saying, gee, I want to live in all 4 of these units, let me buy them up.
Very few people, but yeah.
No one's like, I'm going to live in a different unit every day of the week.
Yeah, I'm sure there's somebody out there who bought a 4-unit quadplex and turned it all into a single family.
Sure.
Some multimillionaire went and did that, but few and far between, agreed.
That was a rental unit before, most likely, and a rental unit after.
True.
So there's in my opinion, in most cases like that, there's no net change in terms of the number of units available for purchase.
Right. Instead, they make the argument that, they bought it from, your grandma, who is charging under market rent. They slapped a coat of paint on it and drove up the rent. And maybe that could have happened. Yeah, that might be true, but you haven't decreased the supply of real estate on there.
No.
You have just changed hands, and because it's owned by an LLC, I guess, that investor's evil and trying to do wrong.
Well, and furthermore, if you're talking in particular, this is looking a lot at East Boston and Lynn.
Sure.
How many of those, 4-unit places got knocked down and you end up with something bigger that's gone up there?
And I'm not sure that fundamentally we should be surprised that investors are buying. Right, like,
if something is too cheap, not too cheap. If investors are looking at that property and saying, "Hey, I can get more money out of this than what the current person has been doing," That's a failure to build enough housing such that rents are staying low. It's not the investor's fault that that's the case regionally.
Yeah. Furthermore, the majority of the Boston area housing stock is multifamily units. You're not going to have a whole lot of individual investors who are or individual homeowners who are going to buy a 3-unit family and live in all 3, right? That's what we just talked about. And so shouldn't be surprising that the majority of buyers here or a large portion of buyers here are corporations or investors. I don't see any sort of allegations here either, right? We've heard a lot of stories over the last few years about how investors are buying up multifamilies and listing them all on Airbnbs. That doesn't seem to be the allegation here.
No.
And so...
And it's also is not the whole, private equity-backed stuff that's going on in Phoenix or in Florida where it's, hey, we're buying up, 1,000 units in a development. Because Boston doesn't have 1,000-unit developments because there's not enough land.
To me, what this reads as is Boston wanting to implement a transaction tax on real estate.
Yeah, it's got that vibe. It's got that vibe.
And my personal view there would be that's a pretty good way to further limit the amount of building and just drive up the cost of housing further. Want to make something more expensive? Tax it more.
I'm really a big believer that if you want to do something economically, you should just do that. I know that sounds dumb, but hear me out on this for a second. If you want to build more affordable housing, then you should build more affordable housing.
Not blame somebody else for the lack of affordable housing?
Yes.
Yeah, fair.
Like I just think sometimes we overcomplicate these things because when you talk about something like a transaction tax, that's got a story behind it. It's got a narrative, which is, oh, look, all these investors are the ones driving up your costs. They're the evil ones, and we're going to put them in their place so that you, the good people of Boston, can, get what you deserve, which is affordable housing.
Furthermore, I think there's some reasonable perspectives on short-term rentals,
Totally.
Airbnbs, that policy that can make sense. Like, hey, if you want to make the argument that hotels are held to a far higher standard than Airbnb owners, you're right, and maybe you should change that. But just coming out and saying, oh, anybody who adds, we talk about housing differently than every other market, right? If this were the bond market, and look at all these professional investors trying to take advantage of the inefficiencies in the bond market, shame on them. What are we talking about?
So it's and here's the other piece that you have to remember is you also then have all of the owners of properties who don't want to see those property values hurt because it's a significant investment for all of them. And so they're like, well, no, I don't want to see my home value hurt in any way. So there are a lot of competing interests that basically, unfortunately, in the way things are set up in many markets right now, don't really work. Let's take a quick break. When we come back, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all 3 and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there have been major changes with the Massachusetts exemption amounts this year. What is the new exemption for Massachusetts? And does that mean that a married couple living in Mass with $4 million in assets could eliminate their estate taxes?
Well, that is true. But let me expand on it a little bit. There is good news. Massachusetts' estate tax exemption has been increased from $1 million per person to $2 million per person, which in essence is great news because now with planning, and remember folks, with planning, a married couple can effectively shelter $4 million from estate taxes, whereas before, with planning, you could only shelter $2 million from estate taxes. But remember, if you don't do your planning and you don't have a trust in place, you will end up wasting one of those exemptions. And so by not planning now, although the exemption went up, which is good news, by not planning, it's twice as costly for people if they don't get their trust done and their planning done. You're just making a much bigger gift to the state of Massachusetts by not doing your planning.
The law firm of Cushing & Dolan has been helping families like yours for more than 30 years. Request your copy of Todd's brand new guide. It's called A Tale of Two Objectives, Reducing Estate Tax and Increasing Asset Protection, right now by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, there's a little bit of a sell-off to begin the new week as Wall Street readies for Friday's big November jobs report, where economists are anticipating about 180,000 jobs were added last month. And again, that'll be later on this week on Friday. At the moment, the Dow off by 0.33% or 133 points. S&P 500 down by 1% or 44 points. And the NASDAQ now down 1 2/3% or 239 points. Russell 2000 actually up by about 1/3%. 10-year Treasury yield, that is up by 5 basis points, now at 4.27%. And crude oil mostly flat, edging higher, trading at $74.13 a barrel. The S&P 500 Dow Jones Indices announced on Friday that Uber will enter the S&P 500 along with Jabil and Builders First Source. All three will replace Sealed Air, Alaska Air, and Solar Edge Technologies in the index. Uber shares jumping 5% on that news. Meanwhile, Spotify's shares are jumping by 8% after the music streaming company announced it's laying off 17% of its workforce, or about 1,500 jobs, as it looks to reduce costs amid slower growth. Chuck and Mike will have more on Spotify coming up. Elsewhere, Wells Fargo downgraded Lululemon to equal weight from overweight, saying the athleisure wear company's positive catalysts have already played out and forecasts more muted growth in 2024. That stock off by 2%. And Carvana shares are surging 14% higher after J.P. Morgan upgraded the online car retailer to neutral from underweight, noting the company has bolstered productivity and made progress cutting costs. I'm Tucker Silva, and that's Wall Street Watch.
Mike, Spotify is going to be laying off 17% of its staff. It is the third round of job cuts this year, but by far the largest. And stock is obviously up on the news of it because stocks tend to rally on job cuts because people assume the company will be more profitable, all else being equal.
And specifically, the executive here is talking about needing to get to profitability and therefore the job cuts. It's not any surprise as to why. They didn't lay off a division. They didn't get rid of some service. It's we need to be profitable. We're cutting jobs.
Is Spotify another one of those companies that just doesn't have a really workable long-term business model that's good for anyone?
I don't know how unprofitable they are right now. I mean,
they lost $776 million last year.
Right. So the question is, are you another Uber or Lyft?
You know, their EBITDA is negative $457 million.
Yeah.
The artists basically all get screwed and get paid nothing.
Yeah. Unless you're Joe Rogan. Then you're doing all right.
Yeah, he does okay.
Yeah.
He's made some cash.
Yeah.
So I kind of look at it, and it's a business that, and again, the only way it's even close to profitability is because they literally pay their artists pennies, fractions of pennies.
Yep.
I forget what the going rate is now, but it's you see the stories about guys who got, hey, we had 1 billion plays on Spotify, and the check comes for like $10,000 or something like that.
Sure.
So I'm just trying to figure out and look, the music business for artists has always sucked. So I'm not going to try. There's a reason why, the idea of this starving artist is a thing. Mm-hmm. But Spotify is trying to say, no, like, we're making it better. And sure, like, I'm sure every person out there loves paying $10 a month to get all the music they want. But it doesn't really work because not even Spotify is profitable.
Yeah, I was going to say, I mean, I pay for a family Spotify account, and I think it's over 10. I think it might be $15 a month at this stage that I'm paying for my family Spotify account, and that is a significant amount of money for me to be paying. I know that I am probably in a small portion of their customers who pays that full boat, that full family plan, $15 a month, basically what it costs for a pretty heavy streaming platform. But if they're unable,
it's actually $16.99 now.
Oh, great. I haven't checked on that in a couple months, apparently.
Yeah. Inflation.
But, I've been calling that into question, like, hey, is this really worth it? Do I downgrade the plan and just, we don't need the whatever it comes with, 5 licenses.
Well, the downgraded plan now is $10.99. I mean, like,
yeah.
What do you really save? Like,
right.
I mean, I guess it's $6. But
yeah. Here's one thing, though. It's not something that I'm going to be willing to go back to the unpaid way of consuming music and podcasts. For me personally, I won't be willing to go back to like the unpaid version of Pandora where you say, play this song, and they say, okay, here's a song like it. If you want to play the real song, then pay us. Not going to be willing to go back to that. And so, I don't know. I think maybe there is a business model there, but they're clearly not seeing the growth anymore, and they've been unable to make a profit so far.
There's nothing that will kill a vibe more than hearing a commercial interrupt your playlist. Or if you're at a party or something like that.
Yeah.
There have been some weird commercials also just that I've heard recently
Yeah, it's 'cause
on
your browsing history, Chuck.
No.
Be careful what you voice next.
So I'm trying. It was a. Have you guys heard the weird Dunkin' Donuts one?
The holiday song or whatever it was?
No,
Or-
I forget. What is it? It's a guy who's like creepily talking about like eating a donut or something. Like
No.
Missed that one. Yeah.
it's very odd. And like it was playing. I think my wife does use like one of the free versions of like Pandora or something like that, and so it was playing in there. I'm like, what is this that we're listening to right now? She's like, oh, like it's some kind of commercial. I'm like, this is not good.
The last time I had a not paid subscription for that was when I had a bunch of family in town. We were playing Pandora, and a commercial came on for like intimate gifts for the holidays, and that's when I decided to upgrade to the paid version of one of those platforms. That was an embarrassing one. So
Yeah, I mean, just keep an ear out at any Christmas parties that you got coming up. If you just listen to the playlist going on. All of a sudden you hear a commercial like, oh, this bastard didn't pay for the subscription.
But
Come on,
it can also
it's
help
just a
you to
Christmas
get gift ideas for
Yeah.
the person whose house you're at. You know, you hear those ads, you're like, they must have been searching for a lot of beef jerky.
yeah, that's true. Comes
Alaska
both ways.
Air reaching a deal to buy Hawaiian Airlines. They should rename this, the merged company.
To what?
Inset Air.
What's inset?
Both of them use those little insets on the map to show you where they are in relation to the U.S. None of them actually stretch all the way out to where the states are because they, are so far west.
Is there anything directly between Alaska and Hawaii? Some like tiny unknown
Yes, the
island?
Pacific Ocean.
I'm thinking for like a tiny unknown island that they could name it after instead.
I don't think
that's,
there
like,
are many
perfectly
unknown islands at
equidistant.
this point, given satellites and all that.
I think they're all
Poor-
known. All islands are now known.
You're right.
Lewis
Not
and Clark wouldn't have really
unknown.
done much in 2023.
Some lesser known island is the word that I
Hey,
was looking
Google,
for.
we'd like to
Thank
go
you.
west.
I can literally go on Google Maps and point out every single island possible.
Are there any up there? I don't think there are.
Yeah. Seems unlikely.
Did you find any?
What? Unknown islands?
No, they could be known islands.
Lesser known.
Is there anything between Alaska and Hawaii?
Oh, I don't know.
What have you been doing this whole time?
I don't know.
In any case, this would make Alaska pretty firmly the 5th largest airline in the U.S. There are going to be antitrust concerns, just like with JetBlue trying to buy Spirit. And so this would be something that, for folks in the Northeast, it really doesn't affect us that much because the flights that actually come to the Northeast from either of these airlines are pretty sporadic and few and far between.
Yeah, I think at one point Hawaiian rolled out a nonstop from Boston
Still have
to Honolulu. Still around?
Still
Okay.
have it.
Yeah.
But it's-
by the way, just to jump in here real quick, Hawaiian Airlines stock up today 178% on this news.
Is that a lot?
That is a lot. Yeah.
That would seem. What were they trading?
Nearly
at
a
before?
$9 move on a $13.50 stock now.
What's the market cap?
Less than $1 billion, less than $700 million now.
Less than 700 now.
Now,
So it was like
yeah.
250 million before.
Pretty small.
It's. I just am convinced that in this day and age, with how much consolidation there's already been in the airline space, small airlines are just there's almost no way they can compete. And I still would prefer to have far more carriers because I like competition more than anything else out there. But it seems like that Spirit JetBlue deal is going to end up going through based on kind of rumblings the last couple weeks here. And does this end up going through as well? I don't know, but it certainly is something that for folks on the West Coast, I don't think this is great for them in terms of competitiveness in those markets.
No, if you live in Seattle or in any of those areas where these are key providers, it's going to be not great.
Now, the key
by the
thing-
way, I'm seeing nothing between Alaska and Hawaii to confirm. Just
Just
whole
open
bunch
ocean?
of blue ocean. So yeah.
That we know of.
There goes my idea. Right? Maybe they just haven't discovered it yet.
Can we do a remote from out there one day and just
Sure,
like we'll
yeah.
just float and see
See if we can
see
find
what
it.
we
You
find?
got internet on a raft
Yeah, it'll be kind of like Castaway, but
with internet
with internet.
and
Yeah,
a radio show.
Yeah. These two companies, they do only overlap on 12 routes. So that is the argument they're going to make to regulators is, look, this is really just we're buying an expansion to our route network as opposed to buying off competition. okay, I can buy that, but ultimately, I'd rather have them try to compete in each other's markets than have one buy the other one out.
Yeah, I'm with you there.
Let's take a quick break here. When we come back, we'll be talking gold right after this.
The latest news on inflation and how the markets are reacting every morning, right here on the Financial Exchange Radio Network. Early estate planning can have many benefits, especially if you want to protect the assets that you've worked so hard to attain. If you're retired or nearing retirement and you haven't done your planning yet, you could be missing out on benefits that can save you thousands of dollars. But there's another advantage. Doing your planning the right way might also help you eliminate your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called A Tale of Two Objectives, Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets in your family and avoid probate while potentially eliminating your estate taxes. Call 866-848-5699 and get your free guide. That's 866-848-5699. Or you can request your copy online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
So last night, as I was heading off to bed, I always like to get the worst possible sleep on a Sunday night, so I checked markets right before I go to bed to see what the Asian sessions are doing. And I see gold at one point up, I think it was like $56 an ounce. It was like $21.40 and change, somewhere in that ballpark. And as of right now, it is at $2,042. It's fallen 5.7% from its intraday high, which is the biggest intraday reversal in about 3 years. And again, the piece here, it's already out of date from last night, where I'll quote from the Financial Times: the Haven asset rallied as much as 3% to $21.35 per troy ounce Monday, a new record before slipping to $20.66 per troy ounce, according to LSEG data.
Now down to $20.42.
And part of it, look, today you've got yields rising. The 10-year's up almost 7 basis points, so that's putting some pressure on it. But even before that, it was kind of falling under pressure. And there's a couple things. The first is the Asian sessions in commodity trading often have some of these blow-off tops on Sunday nights that just end up not really holding once higher volumes kick in. There was a similar one last either April or May with oil, when oil blew through, I think, like 130 a barrel, and then closed the next day at like 115 or something like that, just because the trading's light and things just get a little bit nutty there. So when I do see these, numbers that are hit on that Sunday trading session for a commodity, I always kind of look at it, and when I go to sleep, I say, let's see where it is in the morning, because odds are this probably isn't going to hold. And sure enough, here, it ended up not. It doesn't necessarily mean anything about where you go in the future, but clearly, I think with gold, it's got to be something that ultimately ends up being tied to real interest rates and where they go. And so if you do think you've got a recession coming and that 10-year needs to go, even now, still from, 4.3 down to 3.5 and change or something like that, maybe there's some upside in gold the next 6 to 9 months, but it's...
I was going to say, the relationship there, I mean, it's a U.S. dollar story. It seems to have, one of the rallies seems to have coincided fairly strongly with the Hamas attacks on Israel, so a bit of a geopolitical story there, perhaps. As with anything else, there's no one story to explain a price movement in any asset class, but anything else that comes to mind is the big story there?
The big thing with gold is that people typically treat it the exact opposite of the way they should, much like with stocks. Stocks, people want to trade in and out of so frequently. They're like, oh, I can do this, I can do that. When in reality, if you look at it, stocks tend to be much more predictable over really long periods of time. Gold is an absolutely horrible long-term holding because it doesn't produce anything, so it basically just kind of goes along. And, yeah, you might keep up with inflation, but there are better ways to do that.
Sure.
Whereas the real money in gold is made in really short, really nervous periods, and it's actually better viewed as a trading asset in my opinion there.
The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Mike, when's the last time we talked about crypto on the show?
Sam Bankman-Fried trial, but that wasn't really about crypto,
I'm guessing it was probably a year before that when Bitcoin was setting all-time highs and stuff, and I was getting questions from
cab drivers,
from the people you know in your life who don't know anything about finance. That's kind of where, when you start getting that aunt or uncle who has no business talking about investments, hey, what do you think about this? That's kind of what piques my interest.
Yeah, when my cab driver said that he was making a lot of money by day trading crypto, was kind of that was out in Utah.
So what you do have here is that Bitcoin did top $42,000 in overnight trading. It's up more than 150% this year. does this mean anything? Because
it means a bunch of people that held on to Bitcoin are doing fairly well this week.
Here's where I am on crypto at this point. Is I think it increasingly looks like the actual like major cryptocurrencies, if you want to call them that, are likely going to end up getting absorbed into the Wall Street casino and become just another trading vehicle more than any kind of decentralized network to actually do anything.
Which, by the way, could be good news for the price of Bitcoin.
Could be.
Like I don't know. I'm just throwing it out there that like if it gets financialized and put into 401k plans and IRAs and ETFs, then there's a path where that could be worth more than what it is today. Like I won't deny that. I think your point is that it completely runs aface of what the initial goal of Bitcoin was,
which was, a decentralized platform for sharing information.
But I think the vast majority of people who are buying Bitcoin today don't care about that goal.
Well, and here's the other piece is that we've been talking about these cryptocurrencies for almost 15 years now. I still can't find anyone who can tell me conclusively, here's what this one does in your life that makes something actually easier for you.
Yep.
I've seen like some of the cases where it's like, if you're trying to get
someday
a mortgage,
it can do this. Someday it'll be able to do that.
But it's like, well, I don't want to switch money between 8 wallets, and if I type the wrong thing in, my money's gone forever, and then I got scammed. Because that's kind of what it feels like.
That's the prevailing story on crypto.
It is. Let's take a quick break here. Hour 2 of the Financial Exchange coming up. Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a new guide available this month titled The Key Numbers to Know for 2024. Mike, when it comes to how much someone can contribute to a 401k plan or 403b plan next year, what do those contribution limits look like?
Yeah, so you're getting a slight uptick from 2023, where it was sitting at $22,500. You're now going to be up to $23,000 for those 401k contributions. And in addition, if you're over the age of 50, you're going to get an extra $7,500 that you can potentially put in there. All of that is before any sort of employer contribution or match. So you're now getting up to $30,500 in total if you're over the age of 50.
Mike, what about for folks who don't have access to an employer-based plan but instead need to contribute to an IRA or traditional IRA?
Yeah, so that's where those limits are much, much lower. So this coming year in 2024, you're looking at a $7,000 contribution limit for traditional and Roth IRAs. There are all sorts of rules around this in terms of income phase-outs, who can contribute, if you're employer-sponsored or not, if your spouse is employer-sponsored or not. So there are some tricky pieces here. There is also a completely different set of rules and limits when it comes to self-employed individuals. So definitely other things to know if you maybe own your own business and have a SEP IRA.
Our guide this month is titled The Key Numbers to Know for 2024, and it talks about some of the many changes happening when it comes to contribution limits, cost of living adjustments, and other numbers. 2 ways to request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Finding great candidates to hire can be like, well, trying to find a needle in a haystack, but not with ZipRecruiter. Its powerful technology actively finds and invites qualified candidates to apply to your job. So while other companies might deliver a lot of hay, ZipRecruiter finds you the needle in the haystack.
See why 4 out of 5 employers who post a job on ZipRecruiter get a quality candidate within the first day. Try ZipRecruiter for free at ZipRecruiter.com/free. That's ZipRecruiter.com/free.
At Consumer Cellular, you get the same exact coverage as the largest carriers, but for up to half the cost. Same thing, up to half the cost. Up to half the cost for the same thing. 50% the money for 100% the same thing. I hope I'm making myself clear. Consumer Cellular. When freedom calls, we're here to answer. Call us at 1-888-FREEDOM.
Half the cost savings based on cost of Consumer Cellular single-line 5GB data plan with unlimited talk and text compared to lowest cost single-line postpaid unlimited talk, text, and data plan offered by T-Mobile and Verizon May 2023.
Early estate planning is crucial if you want to avoid massive tax consequences and protect your assets. Cushing & Dolan are experts in estate planning and taxation, and their new free guide can help you do just that. It's called A Tale of Two Objectives, Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets away from the nursing home while reducing and potentially eliminating your estate taxes. You've worked hard to provide for your family, so if you haven't done your planning yet, call Cushing & Dolan today at 866-848-5699 and get this free guide called The Tale of Two Objectives, Reducing Estate Taxes and Increasing Asset Protection. That's 866-848-5699. Or you can request your copy online from our website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck and Mike here, and if you enjoyed the last 6 weeks where markets were surging upwards in pretty much every asset class out there except for oil, which has just kind of lingered, actually fallen pretty significantly. Well, you're not really going to like today because stocks, generally down. Bonds, generally down. Oil, generally down. Good thing there. Gold, generally down. Crypto,
who knows?
Where
is it?
Where's what?
I haven't looked if it's up or down today.
Is there a crypto index out there? I don't know. If so, does it include things like Dogecoin? Moving on. U.S. equities. Dow Jones is off 163 points, down about 0.5%. S&P 500 is down 45 points, about 1%. NASDAQ down 1.63%, 233 points. A big reversal of what we've seen for much of this year. U.S. 10-year Treasury is up 6 basis points to 4.28%. We got oil, West Texas Intermediate, down 27 cents to $73.80 per barrel. When we talk about gas prices, starting to fall again after a couple days pausing. We are now down 1 more tenth of a cent.
Woo.
Down to $3.24.2 on the nationwide average, so that's really fun. And then we've got gold now down $49 an ounce after being up about $56 in early trading last night. So almost a $100, actually more than $100 reversal in gold in a span of about 14 hours now.
Good.
So that's kind of wild. Speaking of wild, Mike, how do you define income?
All right, silly question, but it's being argued in front of the U.S. Supreme Court right now on what was initially passed, at least, as a pretty bipartisan measure regarding taxes and definitions of income. So here's what's actually at play here. Under the Trump administration in 2017, a plan was made to effectively incentivize companies to bring profits back to the United States from overseas.
Yeah, as part of the Tax Cuts and Jobs Act, which was signed at the end of 2017, you had U.S. companies were in a state where they would pay foreign taxes on foreign profits, but could pretty much defer any U.S. taxes until they actually brought the earnings back to the U.S.
Right.
And so instead, what you saw was that to clean up the tax code, Republicans put in a system that had a minimum annual U.S. tax on foreign profits, but tax-free repatriation. So it changed that completely.
So you can, not one time, but over a series of years, companies could bring profits back to the United States that they had been avoiding, such as Apple, Microsoft. These companies brought...
They've done this for like 30 years. They were like, no, we're not bringing these back because we don't want to pay taxes.
Yep.
So it was, okay, here's your one chance to do it, and I think you got a little bit of a preferential rate in doing
Sure.
so. So it was about $338 billion in revenue that were generated by that change. And mostly it applied to companies, as you mentioned, Apple, Alphabet, Microsoft, companies like that. But the tax did also apply to some individuals in certain cases, including those who owned more than 10% of a foreign corporation.
And still does apply, right? This is an annual thing
Yes.
where if you, as a U.S. citizen, own more than 10% of a foreign company that has profits, even if they haven't brought them back to the United States, you will owe taxes on those profits that are held outside the United States.
Enter Charles and Kathleen Moore. Now, if you're not familiar with them, that's because they are just a regular old couple from Washington, I think?
Yep.
Washington State. And I'll quote here from the piece just because it makes it easier. The Moores, who had invested in KissenCraft, a friend's company in India. The couple, backed by the Competitive Enterprise Institute and other conservative groups, has now sued for a refund of the tax they had to pay because they say they hadn't realized any of KissenCraft's profits, so the one-time tax was not within Congress's 16th Amendment power to tax income.
So their argument is basically, we own this company.
It had a profit.
It had a profit, but we have not been paid said profit because
the profit was kept in the company in India, whatever it might be. And lower courts have said, no, the income does not have to be received in order to be taxed. Like, as long as the company made said profit, then you have access to it. You just haven't had it paid out.
Sure.
And so now this is being appealed up to the Supreme Court.
Mm-hmm.
Mike and I are not attorneys who argue cases at the Supreme Court. So we
Not
don't
the last
have,
time I checked.
We don't have any insight as to what the heck is going to actually happen here.
However, if this were a broad-based ruling and they decided that this is not income, there would be all sorts of things other than foreign investments in India that would be impacted. So has anyone here heard of an S corporation? They are a type of corporation like a C Corp, like an S Corp. It has owners. The profits are not taxed at the corporate level in an S corporation. The whole idea is that it's a flow through, and the owners of the corporation bear the taxation, whether or not they receive the income out of that company. So you could be an S corporation that runs $1 million in profit and says, we're not paying anything to our investors this year. You could do that.
And then think about all the tax revenue that is lost as a result of that.
And right now, that person who received no income from that S corporation that had $1 million profit still owes the taxes on their proportion of that $1 million. That, if this were a broad-based ruling, would be one of the things that could be deemed as, no, that's not income because you didn't realize it.
Well, even beyond that, I mean, think about, like, let's say that you just have any corporation with owners.
Sure.
You got a C Corp.
Yep.
It's taxed at the corporate level, but what if the company never spits any of it out? What if they don't pay any of it in dividends or buy back shares? Or, like, if the money's just staying in the company there, does the corporation even have to pay taxes?
Is it income?
It's not even going anywhere.
Yeah, I don't know.
These are things we don't know.
Yeah, I don't know. I mean, I would think that if a corporation has profit, it could. Maybe it would outlaw the possibility of S corp. It has potentially wide-ranging outcomes. I don't know. To me, it sounds like income.
I have no idea.
Yeah.
And I don't have a dog in the fight either.
Nowhere in the amendment, by the way, to the Constitution, is there a definition of income. It is now being left to the Supreme Court to pretty much define what income is here.
Which is a really stupid use of the Supreme Court. Who was the Supreme Court justice that said, I can't define pornography, but I know it when I see it? It's the same with income.
Yeah.
I can't define income, but I know it when I see it.
Yeah. So
I think you probably can define income, but...
Yeah. To me, income exists whether or not you personally receive it, but...
Let me go further. The definition of income, and again, I have no idea how this case is going to turn out or anything.
Sure.
It shouldn't be left up to 9 Supreme Court justices. Get the people at Webster's Dictionary to come up with something.
Well, I guess the point would be that Congress passed a law defining this as income, and
right. How are you going to override it? Because the general view is always, okay, if you don't like it, pass a bill. Well, Congress passed a bill.
Yeah.
I don't know. I think that this is...
It's interesting.
It is interesting, but it's like, doesn't it make you just feel like so much... Again, we're talking trillions of dollars here.
Yeah.
And it's all going to be riding on, how arguments work from lawyers in a room on one day in the next 6 months.
Well, by the way, part of the reason that I think this is being looked at is because there have been other ideas like a wealth tax that have been thrown out, right?
Yeah.
Like, hey, we're going to tax you on unrealized gains to
Sure.
portfolio, or the estate tax, for example, right? It is kind of I guess you're defining inheritance as an income there, but it's a form of a wealth tax, if you will. And so I think that's ultimately what lawyers and these groups are going after is, hey, maybe we win, maybe we don't win this case, but will they at least make it clear that a wealth tax isn't going to fly in the future? Will it make it clear that Congress can't tax unrealized capital gains?
Those are the things I think that are more at stake here than this specific case.
Right.
But again, I have no idea. I don't know what income is.
It would completely, by the way, it would dramatically upend our tax code if this were. I think that's the main point here, is this would dramatically upend our tax code for a pretty significant portion.
If it were completely found, like just a blanket,
bare merit.
no, unless it's realized it's not income.
That would be a dramatic change to our tax code.
Let's take a quick break here. When we come back, we're going to be joined by Corey Adams from Robert Half right after this, talking about end-of-year bonuses.
Breaking business and financial news first throughout the day, only here on the Financial Exchange Radio Network. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us, so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Early estate planning can have many benefits, especially if you want to protect the assets that you've worked so hard to attain. If you're retired or nearing retirement and you haven't done your planning yet, you could be missing out on benefits that can save you thousands of dollars. But there's another advantage. Doing your planning the right way might also help you eliminate your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called A Tale of Two Objectives: Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets in your family and avoid probate while potentially eliminating your estate taxes. Call 866-848-5699 and get your free guide. That's 866-848-5699. Or you can request your copy online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems where I attended meetings with disabled veterans veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Joining us now is Corey Adams from Robert Half, timely talking to us today about the holiday bonus survey that they did for 2023. Corey, thanks for coming on. I appreciate it.
Hey, Mike. Thanks for having me, as always.
So who did you talk to, and what should employees be anticipating for whether or not they're getting a bonus this year?
Sure. So we spoke to more than 1,700 hiring managers across the U.S., and we did it just last month. Here's what we found. Bonuses are back, and more U.S. workers have something to look forward to this holiday season. So according to the research, 95% of employers plan to award year-end bonuses to their staff as 2023 comes to a close. More than half said that they'll be offering more than they did 1 year ago, and 38% plan to offer around the same amount as the year prior. So no matter how you look at it, I think this is a really positive trend.
So that to me raises a pretty important question. If 95% of employers that you surveyed are planning to offer a bonus at year end, what if I don't get one? What does that mean coming from my employer given the results of your survey?
Yeah. So if you're unfortunately one of those 5% that might not receive a year-end bonus, and we've talked about these difficult conversations, they're not easy, right? So the first thing I would say is have an open, honest conversation, have a meeting with your manager, your boss, and ask, how's the company doing? How's the company's situation financially? And then I would inquire if any other employees were awarded a bonus. If they were, in that moment, I would recommend inquiring about what you can do now to improve so that way next year around the same time, you can be considered for a bonus. If they tell you that nobody was awarded a bonus, I would then, in that moment, I would ask and inquire if there's any other incentives that could be taken into consideration in lieu of compensation, such as maybe additional time off.
What does this tell you about, at least hiring managers and the ones that you talk to, about their view on the labor market right now? Because from a lot of standpoints, it's clearly still a tight labor market. Anything under 4% in terms of unemployment indicates, in my view at least, a pretty tight labor market. But we have seen some recent weakening, and certainly we're not seeing the things that we saw back in 2021 and 2022 of sign-on bonuses and all sorts of overtime offers. I remember the big headline of Walmart paying six figures to long-haul truckers. What are you seeing and what are you reading into in terms of employers' opinions about the state of the labor market?
Well, I think the data here kind of speaks to that a little bit. And my thought, too, is this. I think companies, and you said it well, Mike, I think companies continue to feel the pressure of the uncertainty in the economy. This is not the economy and the market that we were accustomed to for the past couple of years. And so I think many employers and hiring managers are now ready, and know they have to be able to reward employees for their hard work. And not just over the past year, for the past couple of years. I think even though we had a booming economy, a booming market, I think there was always that question of what's next. Is this going to continue? So I think everyone's continuing to look at their budget and keeping a close eye on it. But I'll also say that at the end of the day with these numbers, and the survey is not perfect, but I'd also say that it's just really encouraging to see that bonuses are on the table for this many companies and organizations right now.
You mentioned a couple of these, but other than cash compensation, is there anything else that employees are saying that they respond to or that they favor as some sort of compensation?
Sure. So there's three things that we know have been pretty important for most employees through most of 2023. So we know flexibility is important. We also know that hybrid work options are important. And then we also know that strong benefits are important. But the other thing I would just sort of reference, and this might not be an exact perfect replacement for a year-end bonus, but I thought it was prudent to share some perks that we're seeing are a little bit more prevalent and common nowadays that weren't even in existence back in 2019, 2018. So the four things, again, these are not a perfect swap, but I think they're important to employees right now. The four perks that stand out: number one, paid time off for volunteering. Number two would be a matching gift program for employee donations. Third would be an employee discount program, and this is basically an online store where employees can go and buy products or services at a discounted rate. And then the final one, I think we joked about this summer, but it's real, is company paid meals and snacks. And so those won't replace a year-end bonus, but I think as the company is trying to figure out the best way to maximize what sort of income and revenue they may have to reward their employees in the absence of a bonus, these will go a long way.
It's Corey Adams from Robert Half joining us today to talk about a year-end bonus survey they conducted. Corey, thanks for joining us. Happy holidays, Merry Christmas, and we'll talk again soon.
To you as well. Thanks.
All right, time for trivia here on the Financial Exchange, and it's brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now, that's eating good in the neighborhood, void where prohibited. Dine in only. On this date in 1954, the first Burger King restaurant was opened in Miami, Florida. The first Burger King was actually a franchisee of the Instaburger King chain, started a year earlier in Jacksonville. Today, there are nearly 7,000 Burger King locations in the U.S. 3 states have over 500 Burger King locations, including Florida, California, and Texas. Trivia question today: which state has the most Burger King restaurants? Once again, which state has the most Burger King restaurants? Be the 5th person today to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the 5th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Driving on Route 1 north of Boston over the weekend.
Yes.
There's a spot where there's literally a Burger King and a McDonald's right next to each other.
Yeah, there's one on Route 1 in Norwood as well. And that is the primary reason that I've frequented Burger King most recently, is because there's been a massive drive-through line for McDonald's and none for Burger King in that specific location.
Tucker, when's the last time you hit up a Burger King?
Over a year. And that was to try their, what's the Impossible Whopper? Is that what it was?
How was it?
It was fine.
Fine, yeah.
It was just like, it tastes like a bland piece of meat.
I was wondering if there's a state with no Burger King. I would think if there were, it'd be Vermont, but I don't know.
That state is despair.
Yeah.
That's the state with no Burger King. Taking a look at markets as we head towards the bottom of the hour. Dow is still off 158 points currently. The S&P 500 is down 41 and the NASDAQ down 207. Quick break here. When we come back, we got the trivia answer, and then we'll talk about how long it takes to get someone on the phone at Social Security.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Financial planning is a year-round job, and with 2023 coming to an end, it's the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We've written a brand new guide that'll help you understand some key numbers that may affect your planning next year, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, there's also information about how the government taxes your Social Security benefits. Get your copy of this new guide called Key Numbers to Know for 2024 right now by calling 800-393-4001. That's 800-393-4001. You can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there are some high net worth clients that would like to reduce the size of their estate, but they don't want to give up access to their assets. Is there anything they can do?
There actually is. Now, we talk about, doing first estate tax planning, which I tell you should always do. So even higher net worth clients should put together their basic estate planning. I call that the foundation of their estate plan, of anyone's estate plan. And for higher net worths, to be using, revocable trust. There may be one or there may be two, but you want to put those together first. And that helps us shelter what we can. But to leverage your estate tax exemption that is going to be going down in 2026 to about, $6.5 million indexed for inflation, how do we use it? We can gift it. And if you gift it away, think about what you want to gift, but you can put it into another trust called a gifting trust, a spousal lifetime access trust that allows the spouses each other to enjoy what's in the other one's trust, but you've effectively given away the asset. So all that you've given away plus all the growth will be estate tax free moving forward, and it can even skip a generation from there. So planning is critically important.
The law firm of Cushing & Dolan has been helping families like yours for more than 30 years. Request your copy of Todd's brand new guide. It's called A Tale of Two Objectives, Reducing Estate Tax and Increasing Asset Protection right now by calling 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. For your chance to win our daily trivia contest, text us at 617-362-1385. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
Which state has the most Burger King restaurants? That would be Texas. Texas has 584 Burger Kings. Florida has 535. and California is 509. Houston alone has 84 Burger Kings in the city. Once again, Houston alone has 84 Burger Kings. All right. Maria from East Haven, Connecticut, taking home that Financial Exchange Show t-shirt. Maria is also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now, that's eating good in the neighborhood. Void where prohibited. Dine in only.
Yeah, I'm going to need some more stats there. Like, is Houston then the highest Burger King per capital ratio? I got a lot of follow-ups.
Sound like only one follow-up.
No, I'm interested in the same thing with other fast food chains. You know, like,
we should try to go to all of them in one day.
Which one's and rank each
one?
one?
Yeah, rank each of the Houston Burger Kings.
You won't survive.
Well, I'm not saying that you have to get something huge at each one, but just, a sample.
Yeah, sure.
Something like that. Mike, have you ever called Social Security?
Fortunately not. A lot of time on the line with the IRS on occasion, but none with Social Security.
So apparently, what I've found, which is really interesting, is if you actually go into one of the Social Security offices to talk to people, very knowledgeable, very courteous, very hands-on and able to help. If you try to call Social Security, they may still be that, but you might give up before you get to talk to anyone because the wait times are so long.
So since 2011, Congress has cut the agency's customer service budget specifically by a total of 17% after adjustments for inflation. So that's an important caveat there that those are inflation-adjusted numbers. However, during the same time, the number of beneficiaries for Social Security has increased 22%. Now, that's over the last decade, so slightly different scales there. But I think we all recognize that, these are departments that are getting used more and more and are going to increase, I don't know, probably for the next decade in terms of Social Security filing and usage. And I continue to think that if you are trying to rein in spending and you object to things like taxation, one of the dumbest ways that you can voice that concern as a member of Congress is to cut the customer service departments of these organizations.
Yeah.
Right? If you want to change the tax code, I'm all for it. But doing so by cutting funding for the employees of the IRS just
Social
seems
Security
like
Administration.
I know, but I'm using that as another example
Yeah.
because that's frequently done. It's like, okay, let's just cut the funding to the IRS because we can't agree on a tax bill. That's just going to make everybody angrier.
Average wait time for those calling Social Security now is 36 minutes, but in 2013 it was just 10 minutes. So average wait times have almost quadrupled in the last 10 years.
Yeah.
Again, this is a problem that's probably going to get worse because there's nothing that's being done to fix it. I highly doubt that the Social Security Administration is going to be on the cutting edge of some AI system that can handle this.
Doesn't seem likely.
Especially, did you guys see the early reports on Amazon's AI?
Oh no!
What do you mean?
Let me pull it up. Hold on, just a second. Is this it? Let me find where the. So they rolled out this new AI. It was last week. We covered the story on it. Q, that they rolled out, which was going to be for businesses to help with processes internal to different businesses and things and that. And they've already started to have problems where it's developed these significant hallucinations where it just makes stuff up, but also apparently has been revealing confidential information to people who are not supposed to have access to the confidential information within the company.
I can see how that'd be a problem.
And so there's been all kinds of issues.
Rollbacks, if you will.
There have been some problems there. So tying this back to Social Security, unfortunately, especially when you're talking about, look, most people don't want to be just typing in a chat box to figure out their Social Security benefit. They don't feel comfortable doing that for a number of reasons.
Sure.
You need actual human beings to fix this problem.
Yeah. It's not going to be done by technology in all likelihood.
It's not, and it's also a job that, quite honestly, it's probably really hard to hire for.
Yeah, its pay is not terribly competitive. The benefits are great, but you are definitely subject to government shutdowns every once in a while. You
got to be able to pass, pretty significant background checks to work. Like,
sure,
you can't just be, if you have any kind of issue with financial fraud or anything, like you're completely.
I would think crime of any sort in
exactly.
your background, you're not going to qualify for a job there.
So it's a tough job to hire for. So it's going to be something that requires.
It's a customer service job with a big background check.
Yeah, which is hard.
Yeah. It's you're gonna have to pay a fair bit more. Unfortunately, I can't, and nobody other than the Social Security Administration can help you really navigate the system itself and get an appointment to talk to somebody. But Social Security and questions around Social Security are some of the most common that financial advisors deal with. It tends to be a outsized portion of people's retirement income, and let's be honest, it's complex. What do how does it work if I have a divorced spouse and I've remarried? What are the rules around my full retirement age and how much income I can earn before that while collecting Social Security? There are really complicated rules when it comes to Social Security, and in a lot of cases, the decisions that you make around it are permanent. If you have questions about Social Security and how it's going to fit into your overall retirement strategy, these are the types of questions that we at the Armstrong Advisory Group get all the time and can certainly at least help you navigate the rules and regulations when it comes to Social Security and how it's going to fit into your future plans. If you have questions along those lines, feel free to call our office. The number is 800-393-4001. I'm going to give that number again for the Armstrong Advisory Group. Any of your questions around Social Security, call our office. We have people standing by at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Why Biden touts jobs when Americans care about prices?
Because the data on prices kind of sucks.
And the jobs picture's better. Next. I mean, that's basically
it's like the old lawyer
right?
saying, if you can't argue the law, then argue the facts. If you can't argue the facts, then argue the law. Yeah.
I like the I feel like I've been referencing Mad Men a lot recently, but, John Hamm's character, Don Draper, says, hey, if you don't like the conversation, change the story. Or if you don't like the, what was it? If you don't like whatever it is, change the conversation. Like, that's
what's happening here. And while there is plenty of good news about recent prices, it's too nuanced to put it in front of the American public, right? Like, think about how much time we have spent talking about how inflation works for financial markets. Try explaining that in a State of the Union address that, inflation is terrible, but look how much better it is now. Like, that's not going to play. The only argument that you have is that it's a strong labor market. Prices are up 20% since February of 2020 or thereabouts, somewhere in that general range, and that is not a comforting story to anyone. So that's why.
Yeah, I think it's pretty simple there. I want to skip ahead one story here to why repairing your EV is so expensive.
Please.
So what you're finding out here is that repairing EVs is very expensive, and the other piece there that then gets triggered by that is that insuring an EV is very expensive.
So let's talk about why it's expensive to repair an EV. First off, I would imagine there's not a whole lot of professionals that get into EV repair right now.
No, it's something where you've got 270, 280 million vehicles on the road in the U.S. About 1% of those total are EVs at this point.
Last year, an EV crash cost an average of $6,587 compared with $4,215 for all vehicles.
Big thing, EVs are easier to maintain because they don't have as many moving parts. The downside is that when they do break, they are more expensive to fix because the parts that they do need are more expensive, more rare, and there are fewer people trained, so supply and demand tells you it's going to be more expensive. The problem that you run into then is that while it is cheaper to maintain an EV,
if you have a ding, you're screwed.
The other piece there is a lot of that is being offset by higher insurance costs.
Mm-hmm.
And so, sure, you're not taking your car in, twice a year for oil changes, and, you don't need brake pads as often because the engine does the braking for you through, the reverse, whatever the heck you call it, the engine braking through the electric motors. So you don't need as much money being spent in that direction, but a chunk of it gets eaten up by your insurance premiums.
Pretty
instead.
significant, by the way. The high repair costs are causing insurance premiums to be $357 a month for EVs compared with just $248 for gas vehicles.
It eats up all of the savings, basically.
Now, some of that's got to be
service.
price differential, too, right? Like, the average EV
Sure.
cost is a lot more expensive than the average gas vehicle cost
Yes.
right now.
Like,
and so that's playing into it. But this was one of the key goals of Elon Musk had, separate to electric vehicles, of, someday self-driving cars are going to be in fewer accidents. Insurance costs are going to come down. He had floated the idea of Tesla owning an insurance company.
Tesla having an insurance agency, yeah.
This seems to run pretty counterpoint to that, and let's be honest, the self-driving cars are nowhere near where they need to be.
The other thing that I do think is cool as it relates to EVs, but probably isn't going to work this time around, but it's an interesting study that they're trying to undertake. In downtown Detroit, they just installed a bunch of copper inductive charging coils underneath a road to see if they can charge electric vehicles driving over the road.
Seems very neat.
Seems very cool. Probably horribly expensive, especially initially, and probably not going to work very well for a whole host of reasons.
Sure it would be nice if in the hour of traffic that you're sitting on 128 for, like if this were actually going to work, then you install it in some of the most heavily trafficked roadways out there, and I don't know how you pay for it and all of that. A whole lot of complexities about how all this would work, but pretty fascinating technology.
It really is. So I think this is cool. Maybe they can use this to heat your seat also while you're over it. That'd be kind of nice.
Yeah,
Two birds, one stone, because inductive technology is what powers induction stoves, obviously.
Sure.
And so
Just
maybe
slowly light your car on fire.
Yeah, maybe the same coil that powers the car can also give you a little bit of that, heated seat feeling in the winter when you need it most.
Mm-hmm. Yeah.
Let's take a quick break here. When we come back, we'll do a little bit of stack roulette.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. Early estate planning can have many benefits, especially if you want to protect the assets that you've worked so hard to attain. If you're retired or nearing retirement and you haven't done your planning yet, you could be missing out on benefits that can save you thousands of dollars. But there's another advantage. Doing your planning the right way might also help you eliminate your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they have a new guide out this month called A Tale of Two Objectives, Reducing Estate Taxes and Increasing Asset Protection. In it, you'll learn how to keep your assets in your family and avoid probate while potentially eliminating your estate taxes. Call 866-848-5699 and get your free guide. That's 866-848-5699. Or you can request your copy online from our website, LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit DAV5K.Boston. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Financial planning is a year-round job, and with 2023 coming to an end, it's the perfect time to take a hard look at your strategy and what changes you may want to make going forward. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We've written a brand new guide that'll help you understand some key numbers that may affect your planning next year, like marginal tax brackets and retirement account income limits. If you're retired or getting ready to retire, there's also information about how the government taxes your Social Security benefits. Get your copy of this new guide called Key Numbers to Know for 2024 right now by calling 800-393-4001. That's 800-393-4001. You can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Miss any of the show? You can catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The cold weather's here, and if you haven't done it yet, now's the time to start planning your winter getaway to the U.S. Virgin Islands. Explore St. Croix, St. Thomas, or St. John and enjoy incredible beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
What do you got for me, Mike?
For the first time, according to the Wall Street Journal, most golfers play off the course. What are they talking about? Are you just playing golf in the woods and in random fields? No, it's talking about the success of companies like Topgolf and other simulator golf companies that are out there. I think we covered one in Atlanta the other week. That's a private country club that actually has no golf course. It's just a series of simulators that people can play at. But have you either of you looked into playing at Topgolf?
I've gone 3 times.
You've gone to Topgolf 3 times?
I've been in Vegas, Dallas,
How about
and
at the
Austin.
new one in Boston specifically?
Canton?
Is what I'm referring
No.
to, because that one, from what I understand, is incredibly difficult to get a reservation for.
I'm sure.
No, it's not.
No.
Canton.
It's incredibly difficult.
Okay, so expensive, I guess, might be the operating word there. My neighbors were trying to do their father's birthday party there, and it was going to be $1,000 for 5 people. So, yeah, this seems to be taking off in an interesting way, which is probably good for the sport, which was definitely suffering before. But I do wonder what it means for the already struggling country clubs that were out there. A number of them are trying to adapt to the new age of golfer. I suspect that overall it's good for the golf industry as a whole, but does it prevent the demise of some of these golf courses that were already struggling prior to, I think, some of the growth here? Now, what do I know? I don't golf, so this is not exactly my realm of expertise.
So that's the thing. It doesn't matter if you golf or not. It's totally a social thing. It's not. You can still do this and not have ever swung a golf club in your life, because if you have a horrendous shank, it's just going to go off the net and potentially into a target.
Yeah,
and
it's
get
not
you
going to
points.
it's not going to bother anybody.
Right? Yeah,
Also, you're not going to get yelled at.
I've had a tremendous experience all 3 times I've been there.
Yeah. I find it fascinating. I wonder if it grows the sport a little bit, because
definitely.
Let's be honest. Like, I know you two watch golf, but this has been a sport that was struggling. I remember in the 2010s we were talking about, these communities that surround golf courses and what they're going to do since they're all shutting down. They're very expensive to maintain. The requirement to keep the greens nice and to water them is very, very expensive, especially in areas like Arizona. And this seems to be an interesting solution.
And Topgolf aside, you're seeing more and more indoor simulators pop up with,
a ton of those
restaurants.
Well, especially
and bars
around here, that
attached to
makes
it.
all the sense in the world.
Yeah.
I'm kind of surprised that more courses don't actually have them, so they still get people coming through like their clubhouse year round and stuff.
One by me, Winslow's in Marshfield just did that. Actually, they made this Top Tracer, same technology used in Topgolf, attached to the golf course there.
I think it's smart
with heaters and everything, and the food's tremendous too.
Have you guys noticed that plush toys are getting softer?
No.
Tucker, what about you?
Look, I actually saw some plush toys yesterday. I was like, that looks very cuddly. Let me tell you one thing.
So I've had an interesting experience, not so much with plush toys, but I have this theory with T-shirts and sweatshirts that the softer they start out, the worse they feel after 20 washes. Whereas the ones that feel like the old T-shirt that you love getting into felt horrible at first.
Sure.
Because the ones that are so soft, they break down and get all pilly so quickly. And the ones that kind of feel like you're putting on a piece of cardboard at the first time, those are the ones where afterwards you're like, oh, like this is comfy. It's
like a champion sweatshirt, if you will.
Exactly.
Yeah.
Exactly.
So you're saying you want stiffer kids' toys?
I want stiffer kids' toys.
Because right now
these are going to break down in no time. Like
the fight is apparently over softer and plusher toys.
It's which I find kind of interesting because if you're buying a plush toy, how many of those are bought online where you can't like squeeze it as a test? You know?
I don't
know. I would say I don't buy a ton of plush toys, but
I receive a lot of plush toys.
I receive a lot of plush toys.
Yeah, my family receives a lot of plush toys, and I will say that
what do you do with them?
Put them away.
They just pile up in the basement until I can finally convince my kids to give them away. It's miserable.
Too many stuffed animals.
It's miserable.
Stop giving us kids toys.
There's no space in the bed
Our
for
kids'
them.
toys, I mean.
It's like you're like, okay, is the kid in there? Or are they buried under 8,000 toys?
Yeah, hear you.
They need a snorkel to go to sleep. Let's take a quick break for the rest of the day. We'll be back tomorrow on the Financial Exchange.